Why does President Trump want a U.S. sovereign wealth fund? And former President Biden, too. Plus, should the U.S. sell treasuries, gold, or land to pay for it? Hello, members, super savers, and bond course fans. I hope you're healthy and well. This is a question that we've received often in recent weeks. As a way of background, in early February, President Trump signed an executive order calling for the establishment of a sovereign wealth fund for our nation. And this sovereign wealth fund, or SWF for short, has already had a surprising impact on our country, even before it actually saw the light of day. It has brought a bit of much-needed unity to our divided nation. A sovereign wealth fund was actually one of the few issues that President Trump and former President Biden could agree on during the campaign trail. Both of them loved the idea. From the New York Times, Trump and Democrats agree U.S. needs a national wealth fund for investments. In fact, a sovereign wealth fund for the U.S. has even united the more left-leaning Center for American Progress and the staunchly libertarian Cato Institute on the same side of the debate. Both of these think tanks are unified in their opposition against a sovereign wealth fund, although their reasons for doing so are not surprisingly a bit different. We'll get to their respective arguments later in the video. With that in mind, here are the 5 topics that we'll be covering in today's video. 1. What is a sovereign wealth fund? And who else has one already? 2. Where would the sovereign wealth fund get its money from? 3. What would the sovereign wealth fund actually do? 4. What speaks against a sovereign wealth fund? And 5. What happens next? And what would it mean for you and your investments? And yes, I tried to condense this into 3 topics like we usually do in nearly all our videos. But the sovereign wealth fund topic is a complex one. Plus, given the potentially huge sums involved, we wanted to make sure that you have a proper understanding of the subject and how it might impact your money. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. What is a sovereign wealth fund? And who else has one already? A sovereign wealth fund, or SWF for short, is an investment vehicle owned by a country and usually controlled by a country's executive, its government, often under the supervision of the legislative or parliament. Think of it like the assets or fund that a wealthy family would own that may include investments such as stocks, bonds, private equity funds, hedge funds, and real estate, or even entire companies. The Sovereign Wealth Fund Institute publishes this ranking of the world's largest SWFs, with the single exception of the first-ranked Norway Government Pension Fund Global from Europe, with $1.7 trillion in total assets. The 10 largest SWFs all belong to countries in Asia and the Middle East. China controls the 2 next funds on the list. China Investment Corporation with $1.3 trillion in total assets, and Safe Investment Company with $1.1 trillion in total assets. Taken together, the 2 Chinese funds would comfortably top the ranking, and even more so if we were to add the Hong Kong Monetary Authority with its $514 billion on the 10th place. Ranks 4, 5, 6, and 9 go to Middle Eastern governments, including Saudi Arabia's Public Investment Fund in 6th place with total assets of $925 billion. The top 10 is then rounded off with Singapore's GIC Private Limited at number 7 and Indonesia's fund at number 8. So far, these names probably reflect what many of us would have roughly expected. Many oil-rich countries and export champions, but there are 5 U.S.-based funds in the top 50 as well. They're all funds at the state level, led by the relatively well-known Alaska Permanent Fund Corporation, with a total fund value of $81 billion. This may come as a surprise to some in our community, but Texas, New Mexico, and Wyoming appear to have put aside some of their revenues from oil and other natural resources for future generations as well. Unfortunately, our personal home state, New York, is not on the list. So I guess the high taxes where we live are not about to come down thanks to a sovereign wealth fund, and regardless of the oil price. In any case, the White House says that 23 states within our own country maintain their own sovereign wealth funds that control a total of $332 billion in assets. Basically, it seems that everyone who's someone in the world, metaphorically speaking, has their own sovereign wealth fund. And maybe that's one of the reasons why both President Trump as well as former President Biden warmed up so easily to the idea of having their own sovereign wealth fund. But of course, if you have a sovereign wealth fund, you also need to find enough money to put into it. What would be the point otherwise? Bringing us nicely to the next section of today's video. Where would the sovereign wealth fund get its money from? The United States is a rich country in global comparison, both in absolute terms as an economy overall and in relative terms based on the average GDP and income per head. But whatever wealth there is in our country, it's mostly in private hands. The federal government has been running persistent deficits for more than 20 years now, and our national debt pile keeps growing at a somewhat anxiety-inducing pace, as our Diamond NestEgg regulars are all too well aware of. What this means is that the usual ways of funding a sovereign wealth fund, with excess revenue from oil and natural resources, or from an export and trade surplus, these funding methods will not work for a federal government. And a lack of funding could, of course, render the very idea of establishing a national sovereign wealth fund moot before it even gets started. The fact sheet from the White House that came with the president's executive order acknowledges the issue and directs the Secretary of the Treasury and the Secretary of Commerce, who are both now working on coming up with a detailed blueprint for the Sovereign Wealth Fund, to include in the plan recommendations for funding mechanisms, among other topics. This same fact sheet then goes on to mention one of the ideas out there for funding the Sovereign Wealth Fund by putting assets into it that the U.S. government already owns. The federal government directly holds $5.7 trillion in assets. Indirectly, including through natural resource reserves, the federal government holds a far larger sum of asset value. And there are a few more ideas being thrown around, such as selling federally owned land, fear of which is what led the Center for American Progress to oppose the whole sovereign wealth fund idea, as I touched upon towards the beginning of this video. The Treasury could also use some of the higher tariff revenues that should follow from Trump's rate increases, or privatize some government-owned companies like the Tennessee Valley Authority, which essentially behaves like a private utility anyway these days. And in theory, the Treasury could also borrow the money that it wants to put into the Sovereign Wealth Fund. And yes, that means that this national debt number would grow even bigger. Another option for funding is to redirect some of the federal government revenue that is coming in anyway. For example, the Social Security Administration could invest a part of the Social Security contributions it receives from the working population into the new Sovereign Wealth Fund so that it can earn some decent returns, which, by the way, is in principle an idea that some other countries have had as well. Now, none of the ideas that we've seen so far are ideal, and all have their drawbacks. It's just not that easy to build a meaningful sovereign wealth fund if you don't have excess income for it as a country, which we don't have, by the way, to repeat it once more. And I personally think that the whole idea could basically lose momentum and stall completely on the issue of funding, unless someone comes up with a brilliant idea. That said, if President Trump really does want to have our own sovereign wealth fund, which it seems he does, the U.S. would be wealthy enough as a nation to find at least a little bit of money to get a somewhat smaller fund started. So let's play this out and assume that the current administration does manage to scrape together a bit of money for a sovereign wealth fund. What then? What would the sovereign wealth fund actually do? There are two fundamentally different ways of running a sovereign wealth fund. The first approach is to essentially run it like you and I would run our private investment portfolios, to invest in stocks and bonds and maybe add a bit of private equity and hedge fund exposure, all with the goal of getting to an optimal balance between risk and return for your circumstances. And from what we understand, that's exactly how Norway is running their government pension fund. The second approach is to take a much more active stance and to use the sovereign wealth fund as an active tool for the economic development of your country, such as Saudi Arabia's Public Investment Corporation, which finances the development of new industries, cities, or ports in its country. Now, there is in principle no right or wrong here, and Singapore was even so undecided that it split its money between two sovereign wealth funds with distinct purposes, GIC and Temasek. Again, GIC is number 7 on this global list of sovereign wealth funds and is in charge of making money from their financial investments, while Temasek is number 14 on this global ranking and takes a much more active role, for example, by controlling Singapore's national flagship carrier, Singapore Airlines. For the U.S., President Trump appears to want to combine both approaches as well, get better returns, and then use the extra revenue for government initiatives. The White House summarizes it in the fact sheet. Sovereign wealth funds exist around the world as mechanisms to amplify the financial return to a nation's assets and leverage those returns for strategic benefit and goals. As an example, Trump mentioned in an interview that the sovereign wealth fund could be a vehicle for taking an ownership stake in the contested media platform TikTok that the U.S. has promised to ban if its current Chinese owners don't release control. Of course, using the SWF to strategically support the U.S. economy is a goal that few of us as American citizens would disagree with, in principle, if we were sure that a sovereign wealth fund could work in practice. But we need to first ask ourselves the question, what could go wrong? What speaks against a sovereign wealth fund? Do note that there's nothing wrong per se with establishing a sovereign wealth fund if you're a government that has persistent excess revenue and wants to make good use of the money and save some of it for a rainy day. Or if you're a country that wants to develop faster but has trouble attracting sufficient private investment and needs a shot in the arm, so to speak. However, it looks a bit different if you're the U.S., which falls in neither one of these two categories. As I've said before, we have persistent budget deficits and a private sector that has been funding investments and innovation successfully overall for decades. Of course, the government has been playing an important role in all of it, but there doesn't seem to be a specific need for a national sovereign wealth fund in the U.S. at this point in time. The Wall Street Journal quotes Zubair Ahmad, a managing partner of Caravansary Partners, which advises sovereign wealth funds. A sovereign wealth fund sounds sexy, but when you cut through it, you have tons of funds that are doing it already, meaning that the U.S. has already sizable pools of federal money set aside for areas such as infrastructure, technology, and defense. Plus, any strategic and activist sovereign wealth fund will, by the nature of its purpose, increase political control and invite more direct government intervention in the economy, potentially crowding out the free enterprise and private investors that have been driving our prosperity. In that sense, it might be more effective to pay down our national debt first and or to return any excess funds that the government may be able to find to the citizens of this country in the form of lower taxes. Also, keep in mind that a sovereign wealth fund, once established, may be around for a very long time. So even if you like what one administration intends to use it for, your initial enthusiasm may cool down a bit when you consider what a future administration could do. And worst case for the country, the strategy of our sovereign wealth fund might swing around wildly with every new president, which would not exactly provide the stability needed for successful strategic investments. The Cato Institute that we briefly mentioned at the beginning of this video summarizes its opposition to a U.S. sovereign wealth fund as follows. The federal government should control less, not more. U.S. wealth is best off in private hands. In the same vein, the Cato Institute also reminds us that sovereign wealth funds are not immune to malfeasance and even outright corruption. As a warning example from overseas, Malaysia's sovereign wealth fund became embroiled in a massive corruption scandal. Officials were accused of misappropriating $4.5 billion, leading to a 12-year prison sentence for the country's prime minister. So, now that we've gone through the arguments for and against a sovereign wealth fund for the U.S., let's move on to the last section of today's video. What happens next, and what would it mean for you and your investments? The most important point to remember right now is that nothing is set in stone yet, and discussions about the concrete purpose, size, and shape of a future sovereign wealth fund for the U.S. have really just kicked off with Trump's executive order, as we mentioned before. As the next step, Bessent and Commerce Secretary Howard Lutnick are due to report on how their sovereign wealth fund might work in May, meaning that we will need to wait until May to find out more, and that there's not much for us to do right now just yet. At the moment, we don't expect any immediate impact on us and our investments personally. And I can just say that the best approach is the same that we've repeated often in recent months. Don't panic and rush into decisions that you might regret later on. If you're a long-term investor, you may not want to start speculating on certain types of assets that may be used to fund a sovereign wealth fund, whether that be gold, land, or certain types of bonds. It's simply too early to tell. That said, a U.S. sovereign wealth fund is one of the topics that may impact the overall economic and investment atmosphere in our country. So as always, stay tuned to this channel as we monitor the developments and keep you up to date. It doesn't appear that too much will happen before May, though. Now, I've given up on ever getting a working crystal ball, so I can't really predict the future. But if you asked me about how this situation might evolve, here's my thinking. We probably will see some kind of activity from the current administration. Trump and his team seem to really like the idea of a sovereign wealth fund, and the Secretary of the Treasury has pretty much publicly committed to getting something done in the next 12 months. We're going to stand this thing up in the next 12 months, said Bessent. Plus, there are some in the Democratic Party who like the idea of a national sovereign wealth fund as well, as we touched upon in the beginning. Former President Biden's administration was working on the idea too. So the opposition from the other side of the aisle may be less fundamental here than with some other topics. But I would not be surprised if the final outcome was a sovereign wealth fund that would, at least initially, be much smaller and much more restricted in its operations than many observers hope for or fear, depending on their perspective. That said, and given the many challenges we discussed in this video, it might as well be that nothing at all will really happen. Only time will tell. No one knows what the future will bring, but as always, we'll keep monitoring the situation and updating our Diamond NestEgg regulars with the latest happenings. All right, members, super savers, and bond course fans, I hope you enjoyed this video and learned something new. And as always, if you want to learn more about treasuries and bond investing, then check out this video here on our bond courses. And come join our next live member Q&A on Sunday, March 23rd at 5 p.m. Eastern Time, 2 p.m. Pacific Time. We'll be diving deeper into this month's 2-, 5-, and 7-year Treasury auctions and all things fixed income. I've also linked all the details on our bond courses and YouTube Super Saver membership below this video for your convenience. And see you again very soon with more brand new wealth building content for your financial journey.